Welcome to the Knakal News Network. Knakal News Network is brought to you by Massey Knakal Realty Services, New York's #1 building sales firm.
Hi, I'm Carl Gaines, editor of the Mortgage Observer and Mortgage Observer Weekly, and welcome to the Knakal News Network. I'm here with Bob Knakal, chairman of Massey Knakal Realty Services. What are you seeing as far as supply and demand are concerned, and which one is having more of an impact on the market?
Well, in the New York City marketplace, it seems supply is always the thing that drives the market. Everybody wants to buy New York City property. And I think I've been brokering buildings here in New York for almost 30 years. There's only been one time where we saw supply exceed demand. And that was in 1992 when the Resolution Trust Corporation was dumping bank foreclosures left and right. We see demand coming from all different sectors, and the supply has been somewhat constrained, particularly because so many properties were sold in the fourth quarter of last year that really took a lot of the potential sales from the first half of this year out of the market and brought them forward into the end of last year.
Who is looking to buy here in the city as a whole?
The buyers run the full gamut of all types of buyers, and we've seen a big shift in who the most prominent buyers are in the marketplace. But today we have the high net worth individuals and the New York families are very, very active in the market. The institutional capital is going crazy today. They had sat on the sidelines for a couple of years during the recession, but they're back very, very aggressively looking to buy, chasing yield. And we have the foreign market that is really burgeoning. We have high net worth individuals and families from all over the globe that are looking for asset preservation more than anything, that are coming into the New York City market looking to buy properties today.
Curious what asset types those foreign investors are chasing. Are those primarily multifamily, or they're not so interested in owning multifamily though, is that right?
Yeah, basically foreign investors will come into our offices and say, we have 10 million, 20 million, 50 million of equity, we'd like to buy something. What do you have priced at that level? And they'll look at any property type, really with the exception of rent-regulated multifamily, whether it's retail, office, mixed use, medical. We've even sold a couple of development sites to foreign buyers. So that foreign appetite is very, very significant today.
What are your predictions for the rest of the year? Do you see the trends that you've mentioned continuing for the rest of 2013?
I think the supply is going to pick up actually, because values have increased to the point at which for every type of property in every submarket in the city, value is higher today on a price per square foot basis than it was at the peak of the market in 2007. As values continue to appreciate, that creates motivation for people to take advantage of those increased values. And so we've seen supply over the last month or two. We've seen the number of our exclusive listings pick up. We think there'll be more supply coming into the market. And based upon how excessive demand is relative to supply, we expect any increase in supply to be absorbed by the market very, very efficiently without having any impact on value. In summary, supply is much more important than demand in the New York City marketplace. And with the exception of 1992, demand has always greatly exceeded supply. More supply, however, will be coming to market in the second half of the year as sellers take advantage of rising property values. Institutional capital is increasing its geographic interest and becoming prominent players in the outer boroughs.
Thank you for joining us today. Tune in next week for another installment on the Knakal News Network.